5 seconds to the open. You ready?
Who wants to get this thing started right about now?
Welcome to Follow the Money Weekly with your host, Jerry Robinson.
Welcome.
Not just some guru.
Oh, really?
Your host is an economist and a best-selling author.
What an interesting news item. I'd better write that down.
And just someone who likes to make money and help you to make money. Welcome to Follow the Money Weekly. And here he is, Jerry Robinson.
Friends, welcome to the only radio broadcast dedicated to helping you become a better investor and to creating multiple streams of income. This is Follow the Money Weekly on the web at www.ftmdaily.com. Oh, we're coming to you from beautiful Des Moines, Iowa, as we are here this weekend to conduct one of our Building True Wealth financial seminars. These are exciting. I always like these, because I love to get out amongst the people and really share, find out exactly what they're thinking, find out exactly what they're dealing with. I tell you, if you look at some of the recent statistics, you find that many people are struggling to just build a basic savings account. I was stunned to learn recently that 30% of Americans don't even have a savings account. 30%. I mean, that's 3 out of 10 people don't have a savings account. So, obviously we're going to be tackling a lot of these issues, trying to help wake people up as to what's really happening in the economy. And it's always a lot of fun. We call these our Building True Wealth financial seminars because, really, when you think about it, building true wealth is not just always about hoarding up a bunch of cash, but instead diversifying your money, diversifying your savings, diversifying your investments, diversifying your income sources in such a way that you're prepared no matter what happens. So in our 5 levels of financial freedom, we talk about the need to stock up on food and water. Now, I've been told by people, Jerry, you're being an alarmist. I just don't believe that. Grocery stores don't make food. And so all it takes is one breakdown in the supply chain and all of a sudden we're in trouble. So I do believe that we need to be, prepared for whatever the case may be. That's the old Boy Scout motto, be prepared. So that's kind of how we approach the whole financial planning process. And I'm not a financial planner. I'm a former financial planner. But nevertheless, this is just good information for people to take away.
And I think another thing that makes us different from the other financial seminars out there, Jerry, is that, we are called Building True Wealth. And the very first thing that we advocate for people, that we teach, is the need to create a charitable giving plan. And I think that really differentiates our strategies from many of the other teachers, experts out there, is that it's not all about, like you said, hoarding and accumulating. Yeah. It's about, having fun with it, seeing how much you can earn so that you can bless others and give to others.
What good is it to have a whole bunch of money if you don't use it for something positive? What's the point? A lot of people just sit around and they hoard up their cash, they hoard up their money, and they're unhappy. Some of the most unhappy people I have ever met in my life are the wealthiest people that I've ever met in my life. And that's sad. That's shocking.
Me too. It's very sad.
And it's shocking because people are led to believe that the more money you have, the happier that you are. Like there was a study done between Fortune 500 company CEOs and people living out in African tribes. And they found out that the millionaires running these companies versus the people living out in these huts out in Africa, who was happier? Believe it or not, the people living out in the villages in Africa were much happier. Now, how do they measure that? How do they define that? Well, they measure it by peace of mind. And one of the things that we have in this nation is we may have a lot of wealth all around us. Maybe we have wealth, but we don't have a whole lot of peace. And so one of the things we talk about is, Jennifer pointed out, is that building true wealth, that concept, that idea of giving money away. In fact, we're going to have, I'm so excited because we're going to begin spotlighting. I told Jennifer this recently. I said, what we need to do? We need to spotlight some of the ministries and charitable organizations that we like and that we support so that people can find good places to give, And so we're going to be doing that coming up soon on our program. But, okay, so we're here in Des Moines, Iowa. We are very excited. We have our Building True Wealth Financial Seminar. If you live in the area, you're invited. It's completely free. Let me give you the address. It's the Fellowship Community Church in Norwalk, Iowa. That's just right there, suburb of Des Moines. The address is 225 North Avenue. You can call the church 515-981-0699 and get directions. We'll be there from 10:30 through 4 p.m. I'll be doing the 2 Sunday morning services, and then we'll have 3 sessions in the afternoon. And it's going to be fun because what we're going to be doing is we're going to be talking about, first of all, Jennifer and I will be talking about in our very first session many different strategies, I think 11 strategies, on increasing your savings right now and creating savings right now.
That's right. And this is one of the topics that I'm very passionate about. As you mentioned earlier, Jerry, so many people don't even have a savings account. Not to mention the staggering number of people who have less than, I think it's $500 in savings.
Yeah,
what was the number yesterday?
40% of Americans have less than $500 in liquid savings.
There you go, which is just astounding to me. It's very sad. I can sympathize with them. I mean, Jerry and I came from nothing. I mean, we lived in a 1-bedroom apartment when we first started out and no savings. We were in debt. And so I can sympathize with that. And it's kind of a scary place to be when you don't know if your next paycheck is coming in and you're living paycheck to paycheck. So I love helping people create strategies to increase their savings and increase that buffer, that safety buffer in liquid cash to just be there as a safety net.
Give us some ideas. What are some of the things we're going to be talking about?
Well, some of the things that we will share with the group in Iowa, there's 11 different strategies. One of them is something that you've written about in your book, Bankruptcy of Our Nation. It's called the profit principle. And basically, the strategy is to set your profit rate. And I'll just describe this briefly. When Jerry was reading through scripture once, reading through the Bible, he came across a scripture in Proverbs that the very first part of the scripture says, in all labor there is profit. In all labor there is profit. And so you think, many people get up at 6 o'clock in the morning and go to their job for 8 hours a day, and that's their labor. And at the end of the month, if there is no money going into savings, being put back into some sort of savings vehicle or investments, then there's really no profit there from that man's or woman's labor. So Jerry came up with this thing called the profit principle. It basically says that your profit rate from your work equals the amount that you save. And so thinking about this, anybody who lives paycheck to paycheck is basically working for zero profit. And if you spend more than you earn, you're working for a negative profit.
And many people do that. And so the profit principle is something that I found to be extremely motivating. I no longer wanted, once I discovered that scripture and that principle, I no longer wanted to work for free. I no longer wanted to work for the corporations and basically just give them all of my money at the end of the month and say, oh yeah, thanks for giving me these cheap electronic goods in exchange for all of my profit. Instead, I said, no, I want to put some of that money back and save it. I mean, there's other principles, and the Bible's full of information about savings. I mean, Proverbs 6:6 says, go to the ant, thou sluggard, how they, obviously save up for the winter and the summer. And, this concept is very common even in the animal kingdom, so it's a very common thing. But I tell you what, these merchants and these advertisers, they are so crafty. They have taught us to basically put all of our money on a conveyor belt that goes right into their pocket. And we work and we give them our money, and we work and we give them our money. But very few people have the discipline that it requires to put money back on a consistent basis. And so the profit principle is one way to motivate yourself to think about it in a different way. And I think that's really what we do, is we try to help people think about it in a different way so that it makes more sense and that they have more desire to do it.
That's right. I mean, the principle of saving money is not a new thing. We didn't come up with that, but we like to help you. Why don't more people do it? Mm-hmm. It starts with your thoughts, and that's what we like to help you with.
And anybody who's ever had like a heart attack, God forbid, they have a reason to exercise, don't they? I mean,
right.
They, when they hear somebody say, well, you need to exercise, 3 times a week and you need to eat better, Everybody knows that. But if you've had a heart attack or if you've had some sort of health ailment, you know for a certainty that you need to do that. And so we don't want necessarily to have a financial heart attack for us to wake up and realize we have to save money and spend less. So that's why we come up with these strategies to help people before they end up in a mess.
That's right. And one of the things, here's another strategy that we're going to talk about. And this is something that we started implementing way back in the 1-bedroom apartment so that we could start saving money. And to be honest, we still use this strategy. And it's simply using what we call the cash envelope system for monthly expenses. And it doesn't matter what your budget is, whether it's $200 a month for groceries or $700 a month for groceries. But you take that amount, you get cash, and you put it in an envelope and you label it grocery money. And this cash envelope system, what we found, it truly helps you to stick to a budget. I think
it's so easy to whip out a debit card.
It is.
And you forget how much you're spending. But when you only have X amount of dollars in the envelope and it's the 25th of the month and you're looking in the envelope and you got a $20 bill in there, you realize, I've got to tighten the belt here, Exactly.
And if your budget is $400 and you only spend $375 that month, then look at that. You've got some savings to put back. I mean, it helps you stick to a budget and it also helps you increase that savings. So that's another one, using the cash envelope system. And you can use it for all areas of your budget. Your groceries, your gas money, maybe not some of your bills that you have to write a check to, that are pretty much fixed. But for much of your consumption type spending, that would work.
Give us another one before we run on, because I know we have John Burrs waiting in the wings. He's going to be joining us tomorrow to talk about...
He has an exciting topic.
He does, yeah. He's going to be joining us to talk about creating an income stream to last a lifetime in retirement. And he's going to share some pros and cons about fixed index annuities. You know how much money is pouring in right now to annuities? And many of them may not be the right type of annuity that somebody needs, or maybe it's not suitable for the person, whatever the case might be. And John's going to lay out, and he has some great stuff. And in fact, I'm going to bring him on. We'll bring him on in a minute, and we'll have him share. But I'm looking forward to seeing him tomorrow at the conference, and we're going to let him speak for an hour. And you know what? The guy's got a wealth of knowledge. I mean, the guy's been doing financial planning for 26 years. He knows what he's talking about. And I'm looking forward. I'm going to even be taking notes when John talks. I'm looking forward because this guy knows annuities. I mean,
he does.
If you want to know about annuities, this guy knows it. So we'll bring him on in a minute. But give us another tip that you're going to be talking about.
Okay, strategy. Last one that we have time for is diversify your savings. Diversify your savings. And you may ask, well, how does this help increase my savings, Jennifer? You said these were strategies to increase your savings. Well, let me tell you. Basically, there are several eroding factors that erode away money and your wealth. And one of them is inflation. There's taxes, planned obsolescence. There's technological advances. There's several of them. But think about this. When your savings are just sitting in a savings account in U.S. dollars, if you have $100 in that savings account, 5 years down the road, will that $100 still be worth $100? No, because of inflation and the many different things that erode your wealth. So we advocate diversifying your savings and putting your savings into different vehicles in order to overcome those eroding factors on your money. And the way that Jerry and I do it, we call this our DSL savings, diversified 6-month liquid savings. Mm-hmm. So we take our annual income, we have 6 months of that annual income in liquid savings.
Minimum. I mean, that should be the absolute minimum that everybody has, in liquid money. But
right.
Tell them where we put it.
So we divide ours into thirds. We keep 1/3 in our savings account, U.S. dollars, cash. And then we have another third in physical precious metals, gold and silver. And then we have another third in stable foreign currencies. I say stable kind of with quotations around it because if you've listened to this show for very long or read Jerry's book, you know that all currencies in the world are fiat currencies. None of them are backed up by anything, but there are some currencies that Jerry and I like to keep our savings in.
The way I put it is that if you would imagine all of the currencies as boats sitting on the water, some of them have bigger holes in the bottom of them than others do. All of the currencies are sinking against the standard of gold. And so they're all sinking because none of them are backed by gold. But some of them have smaller holes in the bottom of them, so they're sinking less fast versus others. So the dollar obviously is sinking quicker than, say, the Canadian dollar or the Aussie dollar or some of the other currencies that are out there. And so we like to, in fact, in our next quarterly newsletter, I'm going to lay out some of my favorite foreign currencies. We're going to make that a brand new piece. We've been talking about that for the last few quarters, and I just keep meaning to do that. But this quarter, it's going in. I've even started writing it. But I'm going to put in my favorite foreign currencies for that particular quarter every single newsletter. And it'll be a little small segment. But anyway, that's a very important strategy, diversifying your liquid savings.
It is. And just in the last 30 seconds here, I want to share with you that our team did a study on this particular diversification strategy. We back tested it, and over the period between 2002 and 2011, if you had your savings in just U.S. dollars, earning the 3-month T-bill interest rate, which has been very low, you would have actually lost about 4% due to inflation.
After inflation.
Now, if you would have had your money diversified, and we just did the way that I described, a third U.S. dollars, a third precious metals, a third foreign currencies, then you would have actually earned almost 200%.
That's insane.
On your savings.
That's insane. But the reason is really that shows you it's not so much that you're making that much money, that's how much you're losing. That's how much you're losing to purchasing power.
Exactly.
That's a terrible, terrible commentary on the fact that our dollar is just being destroyed through just terrible, poor monetary policies. So that's exciting. We're going to talk about that. And then finally, we're going to have Jennifer and I are going to talk about these 11 ways to save. We're going to have John Burrs talking about lifetime income. And then finally in session 3, I'm going to lay out in detail all of our 21 income streams along with specifics on how to get them started.
Ooh.
That's going to be a good one. And that's kind of the big enchilada. I sure wish everybody who was listening to us could be there in Iowa to join us for this conference. But you can. You can always just meet with your pastor or meet with anybody in your community. Or if you are a pastor listening, you can bring us to your community. We put these on. They're always very well attended. They're always very well advertised by us because obviously our radio show and our email list is national. But we would be happy if you would like to have us come out to your city. You can call us 800-609-5530. That's 800-609-5530. And you can request more information about the Building True Wealth Financial Seminar. We'd be more than happy to discuss the details with you.
We're booking now for the fall of 2013. So if you are looking for a speaker, looking for an event to bring to your church or community event, give us a call, 800-609-5530.
All right, well, I want to bring on John Burrs. He's the retirement specialist who's going to be joining me from the Christian Financial Advisor Network in Des Moines. He'll be joining Jennifer and I. And John's going to be talking about creating a retirement income that you cannot outlive whenever you reach retirement. And I know that's a real hot topic for many people because there have been so many statistics, as we've already pointed out, where people are simply outliving their money. They are not having enough money to protect themselves in the event of a job loss or any of the other uppercuts that life often throws us. And so John he's pretty in demand. I mean, considering the types of strategies that he develops for people who are nearing retirement or are already in retirement. So I want to bring John on, and he's going to be speaking at our Building True Wealth Financial Seminar tomorrow on Sunday. John, great to have you here. How are you doing?
Well, I'm doing well, and it's great to be here and looking forward to seeing you and Jennifer tomorrow.
Yeah, it's going to be a good time. I know we are very excited about it. Why don't you, Jennifer and I have already kind of discussed what we're going to be talking about. Why don't you lay out some of the things that you're going to be talking about? Give us some highlights of what's in store for the people tomorrow.
Well, since the whole theme of the seminar is how to create different streams of income, one of the ways that people really seem to like is how they can get a paycheck for life and without actually having to do work. And so we're going to be talking about different concepts on how people can actually get a paycheck for life. And this paycheck absolutely can last as long as they're alive. So at the seminar, we're going to be talking about and answering some specific questions that I think everybody needs to know, especially the closer they get to the retirement. Like, will you know specifically how much your income will be the day you retire? We want to know, are you nervous about the volatility of the stock market? And is there a safer way to grow your assets while protecting your future income? And that's the key, protecting your future income. And we also want to know, is an annuity the right tool for you to help you achieve those retirement income goals? So we're going to ask those questions. We're going to answer those questions. We're going to talk a little bit about the ABCs of conservative investing. And the ABCs basically is your liquid money, your protected money, and your risk money. We're going to talk about the pros, the cons, what portion of your money should be in each of those categories. Because, Jerry, as you well know, diversification is an important thing, but we also know creating income streams that last the rest of your life is important, because just the simple philosophy, as long as you have an income coming in, you're never broke.
Okay, so let's go through those three types of money that you were talking about. That's interesting. You said the protected money. I didn't catch all three.
Yeah, the first one is your liquid money.
Okay, your liquid money. That would basically be like your DSL, like our DSL savings, where you have 6 months of liquid cash.
Right, and basically with that money, what we know is you're probably going to earn somewhere around 1 to 3%, and probably a little lower right now since interest rates have been so low. But it's those monies that you can get to when you need it. Like you may have a checking account, a savings account, a CD, a money market, those type of investments.
You know what, John? It's interesting about that liquid money, because that's something we are going to be hammering quite a bit, because a lot of the new statistics that are coming out, all these new reports are always coming out showing, the dire state of the lack of savings in America. And one of the more recent statistics shows that most people do not have enough money. In fact, it was 132 million Americans, so almost half of Americans do not have enough money to last them 3 months without a paycheck. In other words, they would be foreclosed upon or go bankrupt or whatever. They'd be on the streets after 3 months. That's almost half of Americans. Is that what you kind of find in your own practice as you talk to people? Do you see quite a few people who don't have a liquid money?
Yeah, basically what we have seen is that most people put the cart before the horse, and they're into heavy investing before they take care of probably the most important need, and that's having some liquidity and emergency money. And, yeah, that just always amazes me that seems to be the last thing. And as you teach, Jerry, level one, that should be one of the first things that you concentrate on, and so we want to talk about that.
That's really good. What do you think about our DSL, our 6 months liquid savings, 1/3 U.S. dollars, 1/3 gold and silver, 1/3 foreign currencies? What do you think about that personally?
Well, I think that's, just a good mix, simply because obviously, the U.S. currency is still the world currency, so we need to have some of that. But we all know that the dollar is being devalued, and so having other currencies, and even though they're devaluing as well, maybe not quite at the same rate ours is. And, of course, precious metals, just a wonderful investment for that liquid money that, what happens if something happens to all of our fiat currency? We've got something here that we'll be able to use in the interim before they get a new currency back to us. So, I think having a proper diversification in those liquid accounts is just a smart idea.
We had a guy call in the other day, and he said, Jerry, because they read about this DSL and they often have questions, how do I diversify my savings? We're not even talking about investments yet, just that liquid money. And one person called in and said, Jerry, do you think that cash value life insurance would be a good portion for some of my liquid money? And I told the person, I don't give advice like that over the phone, obviously, but absolutely, I like that as a form of liquid savings because, again, with that cash value life insurance, you're able to get so many benefits. And yeah, there are some internal costs, and many people always point at that and say, well, it's too expensive. But, those costs buy something. I mean, that's one thing that many people don't realize. They buy the death benefit. They buy many of the benefits that come along with those cash value life insurance policies. So what do you think? Do you think cash value life insurance might also be a good component for liquid savings?
Oh, absolutely, because, again, as you think of your liquid investments, you got to put them in a time frame. You want X amount of dollars in your checking and savings account so you can instantly get to it. The precious metals, it might take 2 weeks to be able to kind of redeem that into money and getting it. So I need to have enough out of my checking and savings to get me through those couple of weeks. And then on to cash value life insurance, same concept. Takes typically 7 to 10 business days to actually get a check to you out of the life insurance. So, as long as you kind of understand timetables inside that liquid area of your investing monies, you'll be fine with it. But, one of the things I like about cash value life insurance that just doesn't seem to come up enough is the fact that while that money's sitting there and growing, it's growing tax deferred. So I'm not having to pay tax on any earnings every year if I don't use the investment. So, it's kind of a nice way to be able to grow a portion of the money.
Yeah, and you also often get the asset creditor protection. Many states still provide, great insulation to people who have money inside of a cash value life insurance policy. And then you also kind of got the Mack truck theory where, God forbid something happens to you and, you get hit by the Mack truck, so to speak, crossing the street. All of a sudden, the money that you put in, that small amount of money you put into that cash value life insurance policy now grows and blossoms into that, much larger death benefit for your heirs or your wife or your children or whatever the case might be. So in many ways, it's kind of a savings account on steroids, so to speak,
Well, absolutely. And, you hit a real good point here. It's creditor proof, and as well as annuities are too. So one of the advantages of those two products is the fact that, if you get in a lawsuit, creditors can't come after those assets.
Absolutely. I mean, that's a huge benefit. But all you ever hear, of course, is the people who say, well, it costs 2 or 3%. Well, you got to pay something for this. I mean, they're not giving this stuff out for free. These benefits do cost money. But in many cases, people find those benefits to be worthwhile. And other people who don't qualify for the Roth, because I am a big fan of the Roth IRA. I love the tax deferral and tax-free withdrawals. But you get to a certain income level and, you're out of luck. You can't put any money into a Roth anymore. So your next best bet is what they call the rich man's Roth, and that's cash value life insurance. You got to throw money into cash value life insurance, and what's nice about it is there really isn't a cap. So you can put money in there tax deferred and then pull it out tax free, and those are really versatile. Okay, so that's the liquid money. What's the next kind of money?
The next one is your protected money, and that's the money where you'll probably get somewhere between a 3 to 7% investment return. But the 3 rules that we look at our protected money is Rule 1, first of all, your principal has to be protected. Rule 2 is we want to retain your gains. And Rule 3 is we need to be able to provide a guaranteed source of income. And so as we look at that second section, that protected section, those are areas where fixed annuities is probably one of the best type of investments for that portion of your money.
Okay, so that's protected money. And so fixed annuities, there's a huge amount of people buying annuities, and you see a lot of these guys selling annuities, and many times they'll, you get a postcard in the mail and they have a steak dinner or something, and you can go out, and it seems like there's a little bit of, I don't know, it just kind of seems a little icky sometimes when you see some of the annuity sales pitches that are out there. Are there things to avoid? Are there red flags that people should watch out for?
Yeah, basically, first of all, you need to have a good understanding. And there are so many different styles of annuities, you need to know what you're exactly buying. And as we look at annuities, it's a tool. And some annuities are good, some annuities aren't so good. And it just depends on how well you understand it, and is it the right fit for what you're trying to accomplish. And so with annuities, there's pros and cons to every investment out there. And at the seminar, we're actually going to go through all the pros and cons of each type of annuity.
Oh, that's really good. Now, what about somebody who says, John, you're living in the 20th century because, inflation's a reality and precious metals and stocks. I mean, that's where I need to be. Annuities, and, they don't fit my profile because I'm concerned about inflation. What do you say to those people?
Well, some of the things that we look at is, well, what stage of life are you at? Are you actually taking an income from your investments? And if you are, well, there's some annuities out there that guaranteed income stream will actually go up as the market goes up. So that helps us be able to stay with inflation. But on the other side, if the market goes down, you don't lose any of your income. You're still going to get that same amount of income. So my point of that is when the markets are doing well, we want to take advantage of increasing our income because that's what's going to help us stay ahead of inflation. So there's a lot of new styles of annuities and how they pay out those incomes that really can help people be able to stay ahead of inflation.
I like that. Okay, so interesting. So you're going to talk about some of those different kinds. And have the fees come down or have they just gone up over the years?
Well, again, depends on what type of annuity you get. And, we always hear the stories about people on the radio and TV talking about don't ever invest in an annuity because the fees are too high. Well, that's basically one type of annuity, and that's a variable annuity. And I classify that out into our risky money, because that can go up or down with the market. But the type of annuities that we like to look in the protected area are annuities that have very low fees or even no fees. And so, again, depending on the company and your situation is going to determine which annuity is going to work the best. And again, it may have some fees, it may not have.
Now, how is an insurance company able to provide an annuity to a person without any fees? Is it because they're capping the money that can be made through the market? Are they just kind of pocketing the difference there? Is that where they make their money? Because they have to make money somehow.
Yeah, basically inside the protected type of annuities, what you're looking at is they're going to cap or have a participation rate on how much you can earn. But then on the bottom side, you're not going to have to worry about taking any losses either. So as you will see when we talk to the seminar, we're going to have a chart out there that's going to show what happens when the market goes up. Well, typically you don't get all the gain, but you typically get the majority of it. And if the markets go down, you don't lose anything. And so if you look at the swings of the market, you probably, especially over the last 14 years, have come out ahead just taking a portion of the upside but not sharing in any of the risk of the downside.
Yeah, I love your approach, too. I think that's why, you instantly became one of the founding members of the Christian Financial Advisor Network, is that you fully comprehend and get the power of diversification, whereas some people would say, oh, yeah, you need to put all your money, into this one type of asset. You are very good at helping people, at least from what I've seen, John, helping them spread out their wealth to make sure that they're properly diversified and nimble in the event that the rules of the game change. Okay, so we have liquid money, then we have protected money. What's the third kind? You said risky money. What's that good for?
Well, the risky money, and most people are used to this kind of money, like your 401ks, most people's IRAs inside of a brokerage account, but it'd be your stocks and bonds, those type, and mutual funds, those type of investments. And, as everybody knows, that can go up with the market, that can go down with the market. But I do want to go back to one thing in that protected area, because fixed indexed annuities are very popular inside that protected area. But again, I think a lot of people think since it's linked to the market, they get discouraged if they don't get all that the market brings back in a certain year. But the products really aren't designed to compete against equities. And so you got to keep in mind this is a different risk level. It does a different thing. And as we move on into the risky money, again, having good diversification out there is very important as well. And, that's where the PACE program comes in. I would classify that into the risky money area because it can go up, it can go down. But, I think having precious metals, agriculture, commodities, and energy, we all kind of know those are areas that as time goes on are going to continue to go up. Even though they may go up and down in the short term, I think overall they continue to go up. So, making sure that you're diversified in all areas is just a smart thing to do.
So fixed index annuities, where would you throw them? Because you know our 5 levels of financial freedom intimately. In fact, you coach people on them whenever you meet with them. But where would you throw the fixed index annuity in the 5 levels? Where do you think it fits?
I would put it into level 2. And the reason is because that level 2 seems to be the level where we're talking about protection an awful lot. And again, let's just go back over those 3 protection money rules. We want to protect the principal, so we're doing that. We want to retain the gains, so that means that in 1 year, if I make money, the next year the market does badly, I don't want to give those gains away, so we're protecting your gains. And then we're protecting your future income, which is probably the most important element of all of it. So, again, I would classify it level 2 simply because of all the protections that come with it.
Well, John Burrs is going to be with me in Des Moines. He's going to be with myself and Jennifer. Jennifer and I are going to be presenting on some New Year's resolutions for the folks who are going to be in attendance at the seminar tomorrow. I'll be talking about all of our 21 income streams, laying them out, giving details. And then John is also going to be talking about protected money, how to protect your money and then create a lifetime stream of income in retirement. And some of the pros and cons that you will find as you get into that. I'm looking forward to it, John. It's going to be fun.
I think it's going to be good to see you guys again. It's been a while, and so we're looking forward to, like I said before, seeing you and Jennifer and the new baby.
Yeah.
So looking forward to getting to be with you.
Yeah, Jerry Jr. is going to be the star of the show, I'm sure. We're going to have to. All right. Well, listen, John, I can't wait to see you tomorrow. I'll see you then, and safe travels.
Oh, you too.
Follow the Money Weekly presents your precious metals market update. Here's Tom Cloud.
Well, Jerry, it's been a dull week, so to say, this week, but there are things that are building for the next few weeks.
Yeah, we've been keeping our eyes on a lot of this stuff that's been kind of breaking with, obviously, that debt ceiling that just won't go away. It's just a constant problem, a constant headache that we constantly have to keep our eyes on. Why don't you share what's been happening with gold and the dollar and how the debt ceiling debate plays into all of this? Kind of give our listeners kind of an update.
Well, as we record this on Thursday afternoon, the dollar's up over 80, and we think the dollar will continue to stay fairly high until the debate starts in earnest in 3 to 5 weeks. We still look back on the last 12 times they've raised the debt ceiling and what it's done for gold and silver as the value of the dollar goes down. And, of course, they're going to do everything they can to keep it above support, but if, we're seeing some predictions now that the dollar could take a 3 or 4% hit, which would be devastating when they come out with the debt ceiling, because we know they're going to raise it, but we know there'll be some arguments and there'll be people talking about deflation and recessions and so forth, but they'll end up settling and both parties will claim some kind of victory, and, the money will be printed and we'll just create another $2 trillion in debt. And that certainly looks like what is around the corner, and like you and I were talking earlier today, I feel like it's July 2011 again when we were doing these shows and telling people to please get in before the debt ceiling, and then gold went up $116, I think it was, in 2 days when the debt ceiling finally got raised. So we're saying the same thing today, get your gold while it's on sale over the next 3 to 5 weeks, because we think it is going to take off and go past 1,800 fairly quickly.
I'm looking at a chart of the dollar, and there has been somewhat a little bit of a bounce, but it broke down below a channel that was moving upward ever since it bottomed out back in 2011. I'm looking here at about a 3-year chart, and it seems like since this year started, it's broken out to the downside when I look at a 3-year chart. This dollar, it's just amazing that it stays up, isn't it? It's just really amazing.
Well, it is, Jerry, but, you got to realize that the bond market now is under strain. There's only 8 countries left in the world with AAA rating bonds, and we're not one of them. And, whether the other 8 are not huge countries, you're talking about Finland and Norway and Sweden and Switzerland and countries like that. So, the big thing is where does the money go from the bond market? I talk to financial advisors, 2 or 3 of them a week that are calling to get my advice on they're getting ready to move their clients out of bonds, and they're looking at gold. And as I've talked about several times on your show, we do think that the financial planner, money manager, financial professional is looking at moving more percentages into gold because of the probability of interest rates going up and the bond market going down. And with the debt ceiling, it's almost certain the bond market's going to take a hit. And where will that money go? Are they going to move to treasuries in other countries? I don't think so. Are they going to put it in money market and lose money on commercial paper? I don't think so. So what are you left with? You're left with the precious metals, or you're just left sitting there taking guaranteed losses. And while it's not going to be that everybody's going to do that, but it just takes, 1% of the money out there to move into gold, and it would send it up dramatically. So I think one of the big drivers for the next few months will be the bond market, which if there's a chart that looks like it's topping out, I haven't seen one any more distinct than the U.S. bond market.
Interesting. What did you make of the European decision this week?
But I think they're just becoming Americanized. It's like everybody, even China, everybody's trying to do what America, as we've talked about many times, when you see rates stay low, it's not for me or you. It's, banks loan to banks, member banks like the Federal Reserve, but that doesn't really affect us. We see rates still inching up, mortgage rates and things, and that we think will go up much faster once the dollar's devalued through the debt ceiling coming up in the next few weeks.
There seems to be a lot of movement on silver lately, at least interest in buying silver. I'm looking here at the last couple of weeks, and the very first week of January, $114 billion were pulled out of the banking system, and there were a few legitimate reasons for that, some legal changes and whatnot, but overall, that was the biggest move out of the banking system that we have seen at the retail level since the September 11th issue tragedy that we saw back then. So there was obviously problems in our economy back then after that, but this was the biggest withdrawal we've seen since then. And then, of course, January was a juggernaut for the U.S. Mint as they ran out of silver coins, silver eagles, and other things, and then just a massive amount of buying by the public. So they're beginning to buy gold and silver in much higher quantities. What are you seeing there as you get phone calls? What are the trends? What's happening in gold and silver buying? What's the demand look like?
Well, let's talk about the silver for a minute. The silver ended the year at $30. It's right now at $31.50. It's up 5% in 5 weeks. Gold, on the other hand, is only up 1% this year, which is still good. It's annualizing at double-digit returns, but it's only up 1%, while silver's up 5%. And there is a severe strain on silver physical. I have been sourcing this week over 115,000 ounces, which will be one of the biggest orders I've ever sourced for silver at one time. I spent over 5 hours on it yesterday, and I've got another hour and a half this afternoon. But while $3.5 million is a lot of money, it'd be a drop in the bucket when you're talking about financial markets, and yet you cannot believe in the thing that really gets my attention, Jerry, is a guy could come to me saying about $100,000 worth of silver, and we could usually get a small discount. These large wholesalers and refineries are saying, if you want $3 million worth of silver plus, then we're going to charge you a premium, especially with the debt ceiling around the corner. Why they want to sell all their silver off today based on a spot price of $31.50 when it's probably going to be $35 in 3 to 6 weeks, and they don't. So if they are asking for a premium, the more you want, the higher you're paying for it, which is unbelievable. You don't see things like this very often, but you can understand where they're sitting. Gold is also tight, not as tight as silver on the physical side, but it is still tight. And you know it's tight when the U.S. Mint cannot buy enough silver to keep up with the demand for Silver Eagles. And, you know, Silver Eagles, I don't sell as many Silver Eagles as I do Silver Maple Leafs or brand new silver rounds. And, you know, if more dealers, and that's with limited dealers buying Silver Eagles. So it just shows you this severe shortage that's out there in silver, and it's only going to get worse. And then an article out today says there's only 8 years supply of silver at current industrial consumption left on the planet Earth. And many people have heard me say and others say that silver will be the first element depleted from the Earth's crust, and it will happen in the next 3 to 8 years, depending on who you're listening to. So we're talking about a metal that's not going to be around much longer. But the last caveat that I want to repeat to people, there is one thing that will loosen up the supply a little bit, and that is if silver jumps another 20%, and I think it will, and gets up to 36, 37, you will have people coming out, timers, and selling silver, and they'll push it back down some, and we'll start building for the next move up. But it's going to take $35 to $37 silver to shake out even the day traders. So with silver sitting at $31.50 for the spot price, we're in good shape to continue to add to our position up for the next 3 to 5 weeks as we're waiting on the debt ceiling to come.
Okay, so you mentioned, and you've said this before on the program, and we've documented it as far as the fact that silver is being depleted from the earth. But I guess the way that they would solve that is that they would just lean more heavily upon recycling silver. They do that currently, but just not as much, I guess. What do you think? I mean, what does the end game look like for that? What happens to prices?
Well, the end game is that the shorts disappear. They won't be able to have large quantities to put up the short markets. Now, it's going to put the industrial world in competition with the investment world, and that's good for the investment world because the industrial users for electronics and everything else, they're going to need the silver, and they're going to have to buy it not from the people that are refining it as much as the people that already have it in their hands. They'll have to go and start, like I said, raising the price to shake silver out for people that, you know, get to a price they want to sell. They'll take it, and we'll see the market the next 5 years change more toward, you know, an economy-driven market, especially if the quantitative easing causes inflation, because then you're going to bring more investors into it, buying silver as an inflation hedge, and it's a double whammy because economies will be expanding and countries will be buying silver and large corporations that need silver for their products. So that's the ultimate. That's what happened back in 1980 when silver ran up from $5 and $6 to $50 during the Hunt Brothers fiasco. So this thing is setting up for a perfect storm on silver.
All right, let's take Tom Cloud's brain, which is full of all kinds of good factoids and lots of experience from being in the precious metals business for over 35 years, and let's transplant that into a 20-year-old body. Tom, you're 20 years old, you've got a little bit of cash, and you're trying to figure out how to manage it. In your mind, how do you diversify with precious metals at the age of 20?
Well, whether you're at the age of 20 to 30 and you're out of high school and have a job and saving a little money, or you're in college and got a little money, I mean, silver's the ideal product because you have time. The next 8 years, it's going to be tremendous price silver. On the way there, there will be volatility. But I have said on this show before, and I'll say it again, if I was leaving the United States tomorrow and I could not look at the newspaper or the iPad to see where any investment was, and I could only put my money in one thing, it would be silver. That would be the one investment that I would feel when I came back in 3 years would be much higher than it is today. Now, certainly there'll be volatility when it goes up and down, but if I couldn't look for 3 years, that would be the number one thing. And the other part is, people in that position, it's good to become savers. It's great to become savers, but you got to look at buying silver as saving. And when you can buy things in increments of 20 ounces of silver at a time, $600-something, it's hard to beat. You can't get a good quality stock for that, or good preferred stock. So you're better just to go buy the silver and just keep adding to it as you can. That's what I would be doing if I was young and starting a savings program. I'd be putting it into silver right now.
Interesting. All right. Why don't you tell the folks, we have a lot of new listeners, Tom. Why don't you tell the folks how they can get a hold of you and kind of what you provide and what kind of services you offer?
Well, we're a brokerage firm for precious metals, gold, silver, platinum, and palladium, physical metals that you take delivery or leave in the warehouse with a certificate, bonded warehouse. And for questions people have, they can reach me at 800-247-2812. That's 800-247-2812. If they're not getting our email blast, Jerry, that goes out 2 or 3 days a week, they can go to ftmdaily.com and hit the precious metals button and sign up. We don't share those names with anybody. They're completely confidential, and if they don't like it, they can always unsubscribe. So anyway, it's pretty easy to get on there, and I think they'll learn a lot. They'll see buy and sell signals, specials, and articles by third people that we think are interesting or relative to the market.
All right, and the perennial question that we receive a lot here is, can Tom help us with precious metals and IRAs?
Yes, we can, and they should visit Sterling, Sterling, trustcompany.com and look at the self-directed precious metals IRA. They can download the application in the rollover form. Gold Star is another one we use, and the Entrust. There's 3 of them that we do most of our business with, but Sterling, the one we do the most with and know the most about the system and how to move things along a little faster. But that would be worth looking at for anybody, because this is the fastest growing part of our business, Jerry, especially a lot of baby boomers retiring at 401ks, and they're worried about what the government may do with those 401ks in the future, so they're rolling them to self-directed IRAs and putting part of it into precious metals IRAs.
Okay. And just a matter of disclosure, are you affiliated in any way with Sterling Trust or any of those companies?
No, not at all. I don't receive anything. I'm just a broker when it comes time to buy the metals, but that's determined by the client, not me. That's determined by the client.
All right, Tom Cloud, available by phone, 800-247-2812. Feel free to give him a call if you'd like, and he can answer your questions, help you with gold, silver, palladium, platinum, and even diamonds, which we've talked about before on this program. All right, Tom, I hope you have a wonderful weekend. Thank you, sir.
You too, Jerry. Talk to y'all next week.
Gold, silver, palladium. If you have questions about or are looking to purchase precious metals, there is one name to know and one name to call. Tom Cloud at 1-800-247-2812. You hear Tom every week on Follow the Money Weekly, and gold and silver are an excellent hedge against inflation. Tom Cloud has over 30 years' experience as a precious metals advisor. Don't buy your precious metals through a call center and pay inflated prices. Call Tom Cloud, 1-800-247-2812. And for a limited time, tell Tom you heard it from Jerry Robinson on Follow the Money Weekly and receive free shipping and insurance on your order. That's right. Mention Follow the Money Weekly and your shipping and insurance charges are waived on your precious metals purchase. If you have a question about something you heard on the show, call Tom. And to secure your precious metals investment, call Tom. Your gold guy, Tom Cloud. 1-800-247-2812. That's 1-800-247-2812. You heard it on Follow the Money Weekly.
Hi friends, Jerry Robinson here. Most of you know that since 2006 I have been sounding the alarm in an effort to help America and the church at large understand what is really happening in our economy and why. And in our efforts to educate our listeners and our readers, I have written a book that has become a best-selling book, Bankruptcy of Our Nation. We've launched a website, we've published a newsletter, we started our own radio broadcast. And now I am proud to announce our latest edition. We have created our very own investment portfolio of stocks and ETFs based upon our own PACE investment philosophy. That's PACE, P-A-C-E, precious metals, agriculture, commodities, and energy. This is our personal stock investment portfolio that Jennifer and I are actually invested in, and we share it with all of our FTM insiders. The investment portfolio is actively managed by certified financial planner Jay Peroni, and our FTM insiders receive real-time buy and sell alerts by email every time that a stock is bought or sold within the portfolio. If you're looking to gain more exposure to precious metals, agriculture, commodities, or energy, or world-dominating stocks in your own stock investment portfolio, I encourage you to join our FTM Insider community. For more details, visit ftmdaily.com or call us 800-609-5530.
Jay Peroni, certified financial planner, here with the idea of the week. This week, we'll take a look at, are you prepared for the next market collapse? How the all-weather portfolio strategy could help you weather the storm. Have you ever been caught in the rain without an umbrella? Or left the house without sunscreen on a hot and humid day? Sometimes the weather catches us by surprise. Just like the weather, sometimes the investment markets can catch us by surprise as well. There are times when the market's soaring and we miss out on gains. Or maybe we have too much in the market and see a major decline during volatile times. That is why we created the all-weather portfolio strategy. The all-weather portfolio is suitable for more cautious investors, those with time horizons of 5 to 7 years, and those who are close to or in retirement. The goal is to protect against losses in a down market and take advantage of the markets when they rise. This portfolio is designed to help you weather the storm. In the all-weather strategy, we look for more stable companies and stable industries that typically pay at least a 2% dividend. We also add in bonds, foreign currencies, precious metals, and other hedging vehicles to help lower volatility in an attempt to produce more consistent returns. Flower Foods, ticker symbol FLO, is a recent addition to the all-weather portfolio. It's a producer and marketer of packaged bakery foods for retail and food service customers. It consists of two business segments, direct store delivery and warehouse delivery. Flower Foods, headquartered in Thomasville, Georgia, is a leading producer and marketer of packaged bakery foods in the United States. The company operates 44 highly efficient bakeries that produce breads, buns, rolls, snack cakes, and pastries, which are distributed fresh to food service and retail customers in the southeastern, southwestern, in mid-Atlantic states, and frozen to national food service and retail customers. Its top brands include Nature's Own, White Wheat, Cobblestone Mill, Tasty Cake, Mrs. Freshley's, European Bakers, Bluebird, and Mikasa. Now, with a diverse customer base, its position in a defensive industry food, its strong market share in the bread industry, and a solid 2.3% dividend, Flower Foods is just the type of stock we love in our all-weather portfolio. Since 2008, Flower Shares has produced a positive gain each and every year, and it's a great buy up to $30 a share. So again, that's Flower Foods, ticker symbol FLO, a stock worth a closer look. This is Jay Peroni, certified financial planner, signing off for the idea of the week. We'll see you again next week.
All right. Well, Jay Peroni is a CFP certified financial planner, a member of our Christian Financial Advisor Network, and he also manages our very own PACE investment portfolio. If you would like to have a free 30-minute review of your investments with Jay, you can call him at 888-664-6963. That's 888-664-6963. 888-866-6963. And when you do, be sure to tell them you heard about him on Follow the Money Weekly Radio.
All right, friends. Well, that brings us to the end of our program. Thank you so much for choosing to allow me into your life each and every week. It is an honor and a privilege to be a part of yours as well. And as always, I leave you with this final word, this time spoken by Erica Jong when she said, "Advice is what we ask for when we already know the answer but wish we didn't." Just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and I'll see you right back here next weekend. God bless.
The views and opinions expressed by the guests on Follow the Money Weekly do not necessarily represent the views of FTNDaily.com or Makers Group Financial, LLC. Even though these are proven strategies, Jerry Robinson is not a financial advisor, and his guests are not legal or tax advisors. You should always consult a trained financial advisor and or tax advisor before making any financial decisions. John Burrs is a registered representative of and does offer securities through Sycor Securities Incorporated. Lifetime Decisions Management Incorporated is not a subsidiary of nor controlled by Sycor Securities Incorporated.